All right, so let's dive right in today. We are going deep on a single day in the markets, March 27th, 2025. And we're really going to break down what happened with the US30.
Yeah, we're going to take all the pieces and really try to see what we can learn from this one day. We got news headlines, we got financial data, and we even pulled some analyst commentary.
Nice. And the big story that day that seemed to be on everyone's mind was President Trump's announcement about some new tariffs on imported cars and auto parts.
Right.
So let's get into the nitty-gritty here. So the US30, for those of you who maybe aren't as familiar with this, it tracks the performance of 30 of the biggest public companies in the U.S. What did it actually do that day?
So on March 27th, 2025, the US30 closed at 42,299.70.
Okay.
Which is down 0.4% for the day.
Okay.
Now, we look back to the day before March 26th, the index also saw a decline, but it was a little bit smaller at 0.15%. So it seems like downward pressure kind of picked up on the 27th.
Yeah, and it wasn't like a straight shot down right. Right, I mean, looking at the intraday action, it opened at 42,432.96, even climbed a little bit to a high of 42,523.84. But then, like you said, that downward pressure, it kind of took over, pushing it to a low of 42,124.73 before we got to that final closing number.
Yeah.
So,
yeah, it definitely a little bit of a bumpy ride.
It was a bumpy day for sure. And what's interesting to me is the trading volume. So March 27th saw a volume of 180.30 million shares compared to the previous day where we saw a volume of 592.65 million.
That's huge.
Yeah, that's a big drop. And I'm thinking this lower volume could indicate that maybe the conviction behind the downward move, it wasn't as strong as it was on the 26th.
Yeah, it's like there was some uncertainty, maybe people weren't totally sure which way to go.
Right, exactly. Okay, so we've kind of set the scene here with the overall market performance, but let's zoom in on that auto tariffs story, because President Trump's decision to slap a 25% tariff on imported cars and auto parts, well, that came out after the market closed on the 26th.
Right.
So the 27th was the first chance for investors to really react.
Yeah, the first full trading day where we got to see how the market digested that news.
So what were the goals here? Why did the administration decide to do this?
Well, from what we're seeing in the sources, the main idea was to try and revitalize American manufacturing, bring back jobs, boost the U.S. auto sector.
Okay, makes sense.
Yeah.
But it sounds like there were some pretty big concerns about what this could actually do to the economy.
Oh, absolutely. I mean, when you start messing with tariffs, there's always a risk of, unintended consequences, right?
Mm-hmm.
One of the biggest worries was inflation. I mean, tariffs, by definition, increase the cost of imported goods, and those costs can definitely get passed on to you and me, the consumer, right? And then there's the bigger picture impact on economic growth. I mean, some analysts were saying these tariffs could actually backfire, causing more harm than good, even if they do help boost domestic car production.
Yeah.
And we saw the initial reaction. The auto sector took a pretty big hit right off the bat.
So the market was definitely a little spooked by this.
Yeah, I think spooked is a good word for it.
But it wasn't all bad news on the economic front, right? I mean, we had some data come out that day that painted a slightly rosier picture.
It was a mixed bag for sure, which I think makes it even more interesting to try and figure out why the market reacted the way it did.
Okay, let's break it down.
So Q4 GDP growth rate clocked in at 2.4%.
Okay.
Which is actually better than the 2.3% that most analysts were expecting.
Interesting.
So that's, that suggests the economy was in pretty decent shape.
Okay, so that's good news.
Yeah, and then we had initial jobless claims coming in at 224,000, also a tad better than the projected 225,000.
Huh. Okay, so more positive signs there.
And to top it off, pending home sales for February jumped 2% month over month.
Wow.
Which beat the expected 1.5% rise.
So we've got this positive data, the economy isn't falling apart. It's actually looking pretty good, but it sounds like the tariff news just completely overshadowed it.
It's like the market was hyper-focused on that one piece of news and maybe downplayed the good stuff.
Yeah, it makes you wonder what's really driving things sometimes. Yeah. All right, let's move on to some of the individual companies that were making headlines that day, because we saw some big moves both up and down.
Absolutely. So, starting with the winners, Pepco stock jumped up quite a bit.
Okay, why was that?
Well, they put out an adjusted earnings forecast for fiscal year 2025 that exceeded expectations. So I guess investors were pretty happy about that.
Makes sense. And then Dollar Tree stock, I mean, that thing soared.
Yeah, that was a big one. Their stock took off after they announced a deal to sell their family Diggler brand.
So the market saw that as a good strategic move for them.
It seems that way.
Okay, and then within the US30 itself, we had a bunch of companies posting gains, right? Like Verizon, Visa, Procter and Gamble, Apple.
Yeah, those are some big names. And there were others too. Coca-Cola, Johnson & Johnson, Walmart, Honeywell, Sherwin-Williams, Boeing, Home Depot, Travelers, Microsoft, Amazon, Nike. I mean, the list goes on.
Wow, so it wasn't like a universal bloodbath?
Not at all. I mean, our sources don't always give us the specific reasons why each of these companies went up, but it's important to remember that not everyone was negatively impacted by the tariff news.
Right.
Like Visa, for example, their strong performance that day might be linked to that positive consumer spending data we talked about earlier, suggesting that that sector is holding up pretty well even with all the uncertainty.
Interesting. Okay, but we can't ignore the losers, right? There were some pretty big drops, too. What happened with GameStop?
So GameStop's stock took a hit, and it seemed to be triggered by their announcement to issue $1.3 billion in convertible bonds, and there was talk about some of that money potentially going towards Bitcoin purchases.
Yeah.
I guess that made some investors nervous.
Yeah, I can see that. So what about the US30 companies that ended the day lower? Who are the big names on that list?
We had a whole bunch, actually. Amgen, McDonald's, Walt Disney, United Health, Caterpillar, Merck, Cisco, Chevron, Salesforce, JP Morgan, Chase, American Express, IBM, NVIDIA, Goldman Sachs, and 3M. So you can see it was a pretty broad decline across various sectors.
It's a lot of companies.
Yeah, and for some of them we have more specific reasons. For example, Jefferies analysts downgraded AMD, and that likely pushed their stock down. But keep in mind, AMD isn't actually part of the US30.
Okay.
But for companies like McDonald's that are in the US30, broader concerns about consumer spending tied to potential inflation might have played a role there.
It's crazy how all these company-specific things are happening at the same time as the bigger market trends. It's like trying to untangle a giant knot.
Yeah, it's definitely complex, but that's what makes it so fascinating, right?
Yeah, absolutely.
Yeah.
So while all this was happening, we also had some interesting analyst actions happening. Barclays raised their price target for Coca-Cola, which is a pretty bullish sign, even with all the market jitters.
Yeah.
And then you had Turkey launching an antitrust investigation into Apple's pricing, which definitely created some negative headlines. But even with that, some analysts were still optimistic about Apple's long-term prospects, especially when it comes to artificial intelligence.
Yeah, Apple always seems to be in the news one way or another.
And speaking of news, Coca-Cola also announced the date for their upcoming first quarter earnings release, which always gets investors excited or nervous, depending on what they're expecting.
Yeah, earnings season is always a big deal.
Absolutely. Okay. And Merck, it seems like they're dealing with some legal headaches.
Yeah, there was news about a securities fraud class action lawsuit being filed against them related to disclosures about the demand for their Gardasil vaccine in China.
So some potential trouble there. But analysts were also talking about the potential of their new subcutaneous version of Keytruda and how strong their overall drug pipeline is.
Right, so it's not all doom and gloom for Merck. They've got some things going for them, too.
It's all about balance, right?
Yeah.
What about some of the other heavy hitters like 3M and Verizon? How are they doing?
So 3M CEO had recently talked about a weaker sales outlook in the short term, and I think that made some investors hesitate, even though they were also highlighting the progress they're making with their long-term transformation strategy, trying to position themselves for the future.
Okay, and Verizon.
Analysts were praising their strong cash generation capabilities, which is always a good sign of financial health, especially in uncertain times.
Yeah, that makes sense. And of course, we can't forget Goldman Sachs. Their stock was definitely feeling the pressure that day.
Yeah, they were one of the big losers in the US30.
Okay, so let's go back to those auto tariffs for a minute, because it really seems like the traditional car companies got hit the hardest. Why is that?
Well, as we've talked about, tariffs increase costs for these companies, right? Whether it's the imported parts they need for manufacturing or the possibility of other countries retaliating with their own tariffs, which could hurt their exports, it all adds up.
Yeah.
And when your costs go up, that can squeeze your profit margins. And in the end, guess who pays for it?
The consumer.
Exactly. And I think the market saw this coming because traditional automakers like General Motors saw their stock prices drop significantly. General Motors was down over 7%.
Wow.
It was a pretty clear sign that investors are worried about the impact of these tariffs on their bottom line.
Okay, but here's where it gets really interesting. Tesla, they did something different.
Yeah, this is one of the big takeaways from that day while everyone else was panicking. Tesla's stock remained pretty steady.
So what's the story there?
Well, it seems like the market sees Tesla as being less vulnerable to these tariffs.
Okay, why is that?
There are a couple of possibilities. Maybe it's because they focus more on domestic manufacturing, or maybe their supply chain is structured differently than those big global automakers who rely on parts from all over the world.
Yeah, that makes sense. So this is a great example of how a single policy change can have completely different effects on companies, even within the same industry.
Absolutely. It shows you that you can't just look at the big picture. You have to dig deeper and understand the individual players and how they're positioned.
Okay, so stepping back a little bit, what was the overall mood in the market that day, and what were analysts saying?
The main feeling was definitely caution. There were signs of consolidation, which basically means the market's kind of taking a breather, trying to figure out what to do next.
Like it's catching its breath.
Exactly. And a lot of analysts were saying this is because investors were waiting for more economic data to give them a clearer picture of what's going on, beyond just the tariff news.
Yeah,
And there was a lot of talk about these trade tensions and how they might escalate. Will other countries retaliate? How will this all play out in the long run?
right.
And one interesting thing we saw was an increased demand for what are called defensive stocks.
Defensive stocks, what are those?
So these are stocks in sectors that tend to be more stable even when the overall market is shaky. Things like consumer staples, utilities, healthcare, the things people always need no matter what's happening in the economy.
Okay, so it's like a flight to safety.
Yeah,
Yes.
exactly. Investors are looking for a safe haven when things get uncertain.
Interesting. Okay, and what about the technical side of things? What were the analysts looking at in terms of charts and indicators?
So from a technical perspective, there were a couple of key resistance zones around 42,787 to 42,872, and another one between 42,500 and 42,600.
Okay, and those are areas where the price might have trouble breaking through.
Right, it's like a ceiling. And then on the downside, they were watching support levels around 42,448, 42,200, and a bigger one down at 41,529.
Okay, and those are areas where the price might find some support and bounce back up.
Exactly. And they were also looking at Fibonacci retracement levels between 42,448 and 42,842.
Fibonacci retracement levels. Now, that sounds complicated.
Don't worry too much about the details, but basically it's a tool that analysts use to try and identify potential areas of support and resistance,
Yeah.
based on these mathematical ratios that often show up in financial markets.
Okay, so like patterns that repeat themselves.
Exactly. But here's the thing. Some of the other indicators like the NCD and the RSI, which are used to measure momentum and whether a stock is overbought or oversold, they were giving mixed signals.
Mixed signals.
Yeah. So it wasn't totally clear whether the market was going to keep moving down or bounce back up.
So even more uncertainty.
Yeah, and that just adds to the overall indecision that we were talking about earlier.
Makes sense.
Yeah.
Okay, let's take a look at sector performance, because we talked about all these individual stocks going up and down, but how did that translate to the bigger picture?
So looking at the US30 components that did well, it seems like technology was one of the strongest sectors that day, with companies like Apple and Microsoft both finishing higher.
Okay, that makes sense, given how dominant those companies are.
Yeah, and consumer staples also performed well with names like Procter & Gamble and Coca-Cola holding up strong. And then we had healthcare with Verizon and Johnson & Johnson providing some stability.
Okay, so people still need their toothpaste and their medicine.
Right, exactly.
Yeah.
Those are things that people buy no matter what's going on in the economy.
So those are the winners.
Yeah.
What about the sectors that had a rougher day?
Well, financials definitely took a hit with companies like Goldman Sachs and JP Morgan Chase both down significantly. Healthcare also saw some broad declines with Amgen, United Health, and Merck all lower. And then there were parts of industrials that struggled, like Caterpillar and 3M. And even some tech companies like Cisco and NVIDIA were among the worst performers in the US30.
So pretty mixed bag there.
Yeah, and we can add consumer discretionary to the list with McDonald's and Disney both down, and the energy sector with Chevron lower as well.
Okay, so lots of moving pieces.
Yeah, and I think that just highlights how important it is to look at things from different angles. Individual stock sectors, the overall market sentiment, it all ties together.
All right, so last question. Which individual stocks do you think had the biggest impact on the US 30's overall movement that day?
Well, considering both how much their price changed and how much they influenced the index, it looks like on the positive side, Visa and Boeing were probably the biggest contributors to the upside due to their significant gains.
Right.
And Verizon, Apple, and Microsoft also helped push things higher.
But there had to be some big losers too, right?
Yeah, on the downside, Goldman Sachs was a major drag on the index. Their stock price is pretty high. and they had a big percentage drop, so that really weighed things down.
Wow.
And then you had United Health, JP Morgan Chase, American Express, and IBM all contributing to the overall decline. And NVIDIA and 3M added to the negative pressure as well.
Okay, so to sum it all up, March 27th, 2025 was a down day for the US30, and President Trump's tariff announcement seems to have been the main culprit. We had some mixed economic data, but the market was clearly more focused on the trade policy news, and then, of course, we had all those individual company stories and analyst actions adding to the complexity of it all.
Yeah, and the big lesson here, I think, is how much government policy can really shake things up in the markets.
Yeah, it's not just about the numbers, it's about the bigger forces at play.
Exactly. And then we had that great example in the auto industry with traditional car companies getting hammered while Tesla stayed strong. It really shows you how the same policy can affect different companies in very different ways.
Yeah, that was a real eye-opener.
Yeah.
So here's something to think about. What are the long-term consequences of these tariffs? It's not just about the immediate impact on the auto industry. What about the ripple effects across the entire global economy?
Right.
Could this lead to changes in how companies structure their supply chains? Will consumers end up paying more for things? What other sectors might get caught in the crossfire? It really makes you think about how interconnected everything is.
Absolutely. And that's why I think it's so valuable to take these deep dives into single days like March 27th, 2025, because it gives us a glimpse into how policy, economic data, and market reactions all come together to shape the financial world.
Yeah, it's a reminder that things are constantly changing and that we need to stay informed and adaptable.
Absolutely. And I think that's a great note to end on.
All right. That's all for our deep dive today. Thanks for joining us.
Thanks for having me. It was fun.
It was great to break this down with you.
Yeah, absolutely.